All right, guys, Mark here on the SPX. As you can see, our analysis was rather perfect, and this thing is moving down, at least for now. Let's see here. Let's go grab that high again right here. Grab the low right about there. And you can see we turned on our 50% retracement. This has put a ton of money in my pocket. I went heavy, but I want to show you how well this is doing right now. And, you know, I may, if this thing pushed down to here, I may pull it off today. That's how good it's doing. We are at 11,950 for the day, almost 7,000 on the open, and it's moving up. Okay, beautiful position. Hit it right on the money, and almost wanted to pull it off right now just because it's so profitable. Okay, so huge profits, and you can see that thing is just freaking moving down right now. Okay, fast. This could, you know, here's the thing though with the markets. In fact, I wanted to show you. I want to go back to the last crash. We'll look at 2008 real quick, and I want to show you what can happen and why we want to consider taking profits. What could happen right now is price could a couple things. Number one, your Fibonacci stuff is infractal in nature. So if price was gonna, let's say if price was gonna get bullish on us, we'd have this move down here, we'd have this move up here, and what we'll notice is this pullback here is probably about a 50% retracement of this. So if price was going to get bullish, it would pull back to here. Let's just say probably right about here, okay? And then it would take off to the upside. It'd be a swing low and a higher swing low, and that would send us back up. So there's this zone that's about, oops, don't want to do that. That's about right here. It's right about here. That's the pivotal zone. It's decision time there. Price is either going to blow through it or reverse. Okay, and I want to show you an example of that in 2008. Let me zoom out. Okay, here it is right here, and it's actually, this one's 2011, and this is what I wanted to show you. So here's a huge move, kind of equivalent in comparison to what we just experienced. Here's the correction right up to here. Here's the downward push. We only reached the bottom right here. Okay. Oops, wrong. So as in our case, we're up much higher. So as we pull back to, you know, at least a 61.8% retracement level of this area, and let's just check it real quick. What we're going to do is go drawings, fibs, retracements, and we will go here to the high. All right, so here we're starting at 0. Bottom line is, if we make it down to here, we make 100% retracement of this push up here, right? So I'm kind of reversing my deal. Just know that when you're measuring this, you want the starting point to get and the ending point to go from 0 to 100. So if I was to go like this, let me show you how I might make a mistake here. Okay, if I was to go up here and pull back down to here, and I'm looking for this retracement, I'm going 100 to 0. I pulled that wrong. So what I want to do is click my pointer, delete it, and lay it down again, and I'll show you what we want. I want to start at the bottom when we're going in this direction. Pull up to the top so that the part we're measuring goes higher in number as it moves, 23, 32, 50, 61.8. And you can see measuring this move right here, which is right here to here, we have reversed to the 50% level right here. 61.8% is here, and 61.8% puts us at about 1920. So if we were to go 1920, remember that. If we were to go lay this original fibs down, we'll see that 1923 is our 23.6 retracement level right here. So that kind of doubles up on two retracement levels where this thing might reverse. So we want to watch this as it comes down. If it begins to move up and go sideways, we don't want our big position to be sitting around while that's happening. So in the case of today, what we might want to do is jump to a 5-minute chart and just keep a close eye on it, because there's a lot of money on the table. And you can see our first 5-minute candlestick has just plummeted. Okay, so we're going to let this, we'll let it bounce back a little bit on the daily chart, on the 5-minute chart here. But we probably won't, I don't know. I'll just have to play it by ear. I'll have to watch it. I can't convey to you every possibility, every possible outcome that's going to take place today and over the next few days. But I do know that I want to use caution. Okay. So that is what's going on, guys. We nailed the assessment from the beginning. I had a lot of naysayers telling me it wasn't going to happen, but I was right on the money. And Fibonacci nailed it. So it works, guys. Now, the only other thing that may have happened is, let me go back to the daily, is this thing could have just begun some sideways action, and it still could do that. But you can see we predicted the move with great accuracy. And I always say, at least for now. Does it mean this thing is going to literally rock and roll to the downside? There's a good chance. At this point, there's a 50-50 chance that it will. But at this point, we've made, $14,000 or whatever that number is right now. We'll have to check. And let's just, for the sake of the video, go look at the Dow Jones Industrial Average. Nice gap down here. We did not have a position on the Dow. If we did, we would have killed it. We had a huge gap down, massive gap down. Okay, we're kind of moving up right now. Let's go look at Facebook, because we were looking at that in the first videos. And Facebook gapped down as well. So I'm pretty sure the market across the board probably gapped down today. So probably expected for a little bit of a recovery for the day. So we'll see what happens. Okay, I'll update you guys on this position. But this kind of ends the Fibonacci tutorial. Okay, I think we did this in 4 videos total, and we're up 10 grand on that position. Okay, 10 grand in just a couple of days. Beautiful trade, 11,350. So we're starting to move a little bit. Anyway, Fibonacci nailed it, guys. Hope you enjoyed this video and the few that preceded this, and I'll see you in the next video. Thanks.